Sure, Sean Cunningham. I'm Chief Financial Officer for Integrated Capital Management. I've personally spent the last 30 years in various roles of real estate accounting and finance, 10 years as CFO of a ground-up retail and multifamily developer. And as of late, Integrated Capital Management brought me over as our CFO in 2017. That's when we launched our first fund. Integrated Capital Management is a boutique capital management platform. Our first fund, we closed in 18 months oversubscribed, and it's primarily a co-GP fund. So it kind of plays in that sliver of the capital stack alongside the sponsor. So our returns are better than project level, but they're always less than the sponsor because we also promote the sponsor. Not to get too complicated, but we invest in all asset classes, all geographies, and we've done some sidecar stuff. We closed a QOZ investment, and our investor mix is not institutional. It's high net worth individuals. We've got about 6 different billion-dollar family offices, the Disney family being one of them. We've got a couple RIAs, registered investment advisors, that allowed us to go on their platforms to work directly with their investors to invest with us. And we've got a few foreign investors. So I think, unlike Noel, I know he's got like 750 investors, which is almost 10 times larger than us on the investor side. We're about 75 to 80 right now. Oh, and I'm in Santa Monica, West Los Angeles.
Excellent. Bob, I think you're next.
Sure. I'm Bob Antonucci. I'm a tax partner with KPMG in the Los Angeles office. Spend a lot of time in the real estate space, kind of all across the board with funds as well as with REITs and public companies, kind of all across the board. Also, spend a little equity in hedge funds as well. And I'm in our downtown office right now in Los Angeles.
Excellent. And last but not least, Dorota.
Hi everyone. So my name is Dorota Kowalski, and I am a director of fund administration here at Juniper Square. My background, so I've been in the financial services industry for over 20 years now. Started in public accounting, Big Four, worked for Ernst & Young for about 10 years. I was part of the E&Y audit practice in the Chicago office, where I served a diverse client base specializing in hedge fund and private equity funds. And then after Ernst & Young, I moved to the fund admin space. I spent there about 8 years, mainly involved in fund accounting and financial reporting, worked on a wide range of hedge fund and private equity fund structures, working with different asset classes, also including real estate. And my most recent experience right before joining Juniper Square, I was a VP of finance at a private equity firm in Chicago. And I am in beautiful, sunny, but snowy Chicago today. That's where I'm based.
Excellent. Thank you, Dorota, for representing the non-West Coast on our little team today. So we are here to talk about the year-end process. You may know this as obviously the time of the year where there's the most work and the most potential for things to either go really smoothly and beautifully or to go off the rails. And so just to start off, I'd love to hear just what are the panelists, what are your experiences with this time?
You go ahead, Sean.
Okay, I'll start it off. Noel and I mean, if you first of all, I want to welcome everybody that's on this event today. I mean, you're our peers. I just want to, we're at the year-end process is beginning. So I want to wrap my arms around you all and give you a big hug. It's going to be an okay year. We're going to survive. We're going to get through it. Everything's going to go smoothly. We're not going to have any problems. And we'll be delivering all our K1s to our investors in the next 2 weeks. So I think that sums it up, Noel, right? That's what we're doing. Unfortunately, all of you that are here, you know that almost everything I just said is not possibly true. It doesn't work that way. Our business of delivering K1s to investors and getting to that final process, it takes time. I just want to say for us in particular, one of our biggest challenges is we're a passive investment firm. We don't invest directly in the real estate. We don't manage our own real estate. So I'm at least 2 or 3 entities removed from the project level investment itself. And so what that means for me is I'm always under the gun time wise. And Noel and I will talk a lot about this different topics here, but my biggest challenge is how can I get my K1s from my fund investors delivered to them more timely and more efficiently earlier in the year. The thing for us is because we're a passive investment firm and because we're 2 or 3 entity levels removed from the projects, we're 100% reliant on the materials and the financial reporting that comes from our sponsors. So if I've got a sponsor that has to do a year-end audit, which we require, I may not get those audit returns until, K1s, April, May. Then those have to roll up to another pass-through level entity. Tax returns get done, K1s get issued. Then that goes to another level. Then it might end up finally at our fund subsidiary that owns the investment. And then we'll have our equity pickup that comes into our fund. Now you multiply that times 6, 8, 10 different sponsors and investments. And now it becomes a time coordination nightmare because you have to wait till all of your sponsors' investments, K1s, have rolled up for our fund to be able to commence its audit. And I know now this is where everybody loses their hair and this is where the hiccup occurs, is meanwhile, this now pushes you into June, July before my fund audit can get completed. And then finally, I'm somewhere around the end of July, beginning of August, when my K1s can actually get delivered out to my investors. Meanwhile, you've got all your investors calling you. They call me. I'm sure they call Noel. Hey, what's my estimated K1 look like? Hey, what are my gains and losses? Do you have a tax projection for me? And so we're trying to do our best to navigate all those phone calls, try to provide as accurate information and estimates as we possibly can, while we're trying to work with our fund admin and our tax and audit people to drive the bus forward to ultimately get to where our funds can issue the K1s to our investors, to all of you, all of our investors, which are, as fiduciaries, the most important people. Our clients are our investors, and we have to serve them well. So anyway, sorry for that long answer, Jay, but hopefully I just teed up about 50 things for everybody to talk about.
Yeah, well, I would say my place in this overall process is a little bit different than Sean's. I oversee the investment management and investor relations component at Cunningham. And so we are the operator. We do the property management, we do the asset management, we manage the construction, all the value add, renovations, acquisitions, dispositions. We do everything. And we have, as Shonda mentioned, we have over 700 investors. And investors could be in one deal. They could be in 18, possibly. So there's around 40 projects and about 25 to 30 different vehicles. And so for us, it requires a tremendous amount of discussion up front, working with KPMG and getting everyone on the same page. We start in October, getting everyone together, starting to gather the information. What do we need? What's been happening over the year? What's going to create some additional work? Did we form a TIC? Did we sell something? Did we refinance something? Managing all of that, and then getting all that data. So we'll have funds, but each one of these funds may have 6 to 8 deals in it. So we're spending a lot of time going through all of these individual properties, gathering all that information. And I would say over the last few years, it's gotten, I would say, better and better. We've got a really high-class group of people working in our accounting group and working with KPMG and working with our fund administrators to pull all this information together. I think that one of the biggest issues is just the sheer volume of it, being able to get all those K1s, get the audits done, get the financials done, but being able to prepare K1s, thousands of K1s. So getting all that information, making sure it's accurate, and getting it out to the investors in a timely manner it's a task, but it's something that we have worked very well together to kind of streamline that process. So we start with the very beginning with the end in mind. What do we have to do? What's it going to take to get there? And it's constant care and feeding of that process and milestones as we work through it. And so far, it's in my time at Cunningham, I've been here going on 4 years. It's gotten better and better every year.
And Noel, it's kind of interesting. One of the things you talked about there was just about kind of, going over kind of what happened throughout the year and as you start getting the year-end process. But one of the things that probably is helpful or could be helpful is to make quarterly meetings. So that way kind of the administrator, the tax audit folks, as well as internal for you guys are all on the same page, where every quarter maybe you can go over what happened that previous quarter so that kind of everybody can be up to speed and real time and kind of help prepare before even the year-end process begins.
Yeah, we had this conversation the other day. One of the things that has been very beneficial for us is that our service providers we work very, very closely with throughout the year. And so anytime we're doing work that has some kind of a tax implication, refis, we're looking, what's the taxable gain on sale, or what kind of tracing might there need to be. We are speaking with KPMG constantly, and that process just gets more robust as we head through the audit process. But everyone is on board at all times. We don't pick and choose, send certain information over here and certain information over there. We have service providers that we work very, very closely with, which makes that year-end process also, I think, a little more smooth.
Yeah, let me piggyback on that too. I Noel just touched on, I think, a critical component, and Bob also reiterated it. It's the regular communication. I think is absolutely vital. If you think as somebody that's running a department or your CFO, whatever your role is, if you think that you can just sit back and wait for things to happen, I think you're going to be running into a lot of challenges and a lot of disappointments and a lot of expectations that aren't going to get realized. I think for all of us, especially as we grow older and more seasoned in this business, is more and more the most important thing is effective communication and really involving our partners early on in the process. So we use an outsourced third-party fund administrator, and it's funny, when I was 20 years ago, a bad word in the investment world was the word audit. I was terrified of the word audit because I thought it meant, they're going to come take all of our stuff. And I didn't really realize that audit is not a bad word. For investors, audit is critical because you have to have your compliance, but you also need to have that third-party independence to know that your fund managers, your capital management firms, your developers are using your money correctly and accurately, providing it effectively, and nothing's being misappropriated. And obviously, that's just the basic high level of audit's got a lot more role than that. But what was really important for us was as I started to engage, especially in the last 4 years with our fund administrator, I find myself more and more today saying to my fund administrator, have we run this by our auditor yet? What does our auditor think? Is that distribution method going to pass audit? And so now I found that we're actually more engaged with our auditors. In fact, right now, it's like my fund admin, we're talking every week. I'm probably talking to my auditors every 2 to 3 weeks right now because I want to make sure that anything we're doing, especially going into the future, and any decisions we make will pass audit testing on a going forward basis. And I think really engaging the auditors has been something that has really changed my mental philosophy and my professional philosophy in the last 4 years, because what I found is it saves a lot of time on the back end, because then when they get into the audits, they already know what we're doing because we've talked to them all year. We've been so uber transparent with them. There are no secrets. There are no surprises, and they've already kind of pre-vetted everything. So I don't know if that will help people on the phone. Auditors are not bad. They're actually your friends. And the more you are transparent and engage with them, I think it can really save a lot of time through your audits.
Yeah, if I could just add also from like the fund admin perspective. And so what we've been hearing is definitely, prepping, doing things up front to control some of the challenges that will come at year end, no matter what, is the key. So I think we all agree that, early planning, it plays an instrumental role for sure. So doing the planning kickoff call is crucial. because this is where really the decisions and expectations are shared between the teams, fund admin, audit, tax, all the main decisions around staffing, timing, drafting the timeline for the audit draft that ultimately that's the end of the audit, the results were published. Really getting everyone at the same page, communicating all like the deliverable timelines, explicitly communicating who is responsible for what is a must. And as some of you guys also alluded, planning for like regular check-in, it's a key. You gotta really evaluate your progress as you go. We on the fund admin side, obviously, we are the books and
talked about that. Is to get you guys quarter so that under
yeah. What's also been working well is to really plan when you especially exchange the information between the teams. It's what works well, we found, is to appoint maybe one point of contact on each team so that person can coordinate, facilitate, review the responses you provide to your team, especially to the auditors, because that definitely will cut on unnecessary questions that will come in the end. So there's a lot of things you can do, control things you can before you have to go to ER. Hopefully that's not the case, but just try to plan ahead and alleviate some of the pain that in the end it will come in some form of fashion, unfortunately. But there's still a lot we can do.
So let's get really specific on that point. So for folks who obviously, presumably folks here are already a couple weeks into their process, but it's probably not too late to do some of the right things up front. What specifically would you suggest or have you learned to do up front in the process that makes things go well?
I would say some of the things that we've done is get everyone together on the same page with a plan up front. Mm-hmm. And talking consistently and having milestones. You always know we have updates every week from the auditors, and they'll say, okay, where are we relative to plan on these specific items? What is there a property that something has come up, we want to spend a little bit more time or energy on something? So we always have a good idea. Everyone always has a good idea as to where we happen to be in the process at any given time. And another part of that is we do find that auditors will change. The staff that's going to be coming into the office every year might be different than the staff that was there last year. But a lot of the structures and things that we have don't necessarily change. So I did that yesterday, where I spent about an hour on the phone with one of the auditors explaining how the funds work and the flows work, and looking at equity roll forwards, things of that nature. How do we calculate that? And this person was incredibly bright, and it didn't take him very long to figure it out, but we went through, and I'm having to explain those things, but I've had to do that before, and I have some visual aids and things that I've used in the past that I just kind of have as a go-to, which makes life a lot easier. And then we just make sure that everyone is comfortable. You can call any of us at any time. If you have questions, you have a concern, we can't necessarily, it used to be, there was somebody in the office, and the auditors, they had their own room. The folks from tax would come through every week. We can't really do that to the same degree, but we're all in teams. We use that. And so we have face-to-face meetings on a pretty regular basis, and keeping everybody on the same page consistently, and kind of bringing people along with regard to where we are in the overall milestones. I think that process has just gotten better and better.
Mm-hmm. Yeah, and then for us, I think the first thing that I do, and again, everybody's got their own process, but I think there's some consistency here. The first thing that I do at the beginning of the year, and I did this on January 4th, and there's people on this event that haven't done so, we send out our audit notification letters to all of our sponsors, our investment sponsors. And whether they're going to have their own independent audits at the property levels, or mostly the letter notifies them that as a fund, we are going to have an audit. And so there's going to be some required testing at the property level that's going to come as a result of our audit. So we want, as Noel mentioned, we want to get out in front of that. And so we'll provide a list of all of the basic level materials that we want, whether it's trial balances, general ledgers, 12 months bank statements, the quarterly P&Ls and year-end balance sheets, any supporting schedules, copies of property tax bills, blah, blah, blah. So you have a list of stuff. And usually a lot of it is around, your year-end banks, your loan statement with your interest expense that reconciles to your P&L, since that interest expense usually makes up the largest portion of your equity pickup pass-through from each investment. Anyway, so once that letter goes out, it's exactly what Noel said, is then we want to schedule a call with each of our sponsors to go through that list, to go through and set up an expectation of milestones, some kind of timeline schedule that we can achieves, and more importantly, if there's a way for me to help the sponsors with their audits, I'm going to try to lend my expertise to help their process go a little smoother. So I was on the phone yesterday with one of our sponsors, and it turned out they just had their auditor call me. And I was able to go through in like 15, 20 minutes what our expectations were, get on the same page. And I've made myself completely available to the auditor to help work with the sponsor to help them with any audit questions they have, because they've never been through an audit before. So those are the kind of engagements and really hands-on, I think is what Noel was really talking about. You're really hands-on with each of these teams, with each of these groups. You're regularly talking. And I think by doing that, you really set up kind of a nice game plan so that on a weekly basis, you're just really following up on your milestones and keeping the train moving forward instead of having to look back and realize you missed a whole bunch of things.
And I will say, in here, one of the things is everybody's focused on the numbers and all of that and the financials all together, but also don't remember to kind of check with all of your partners and see if there's been any changes of addresses, any change in all of your partners, and see if there's been any change type of entity. Did you perhaps contribute did one of the partners contribute from the individual to a trust, and now they need updated 2K1s, things of that nature? That is not a fun surprise at the end of the day when you get that. And have to work that after being already done when it comes and you've given it to the partner. So that's something to be aware of as well. If you can get that at the front and get a list from all your partners of any changes throughout the year, that goes a long way too.
It's a great point.
So let's fast forward the clock a little bit. So at this point, it's crunch time. Clock is ticking. Things are starting to come together. Your blood pressure is like a little bit higher than it is at other times in the year. What's going through your mind at that point? How do you land the plane well?
I mean, again, this is I have a slightly different perspective, being more focused on the investor relations side of this and dealing with investors and K1s and all that. What we have done is we increase just the amount of interaction that we have with our investors. And so it's a little easier now. We added Juniper Square a little over a year ago. It gives us the ability to not only put all that out there digitally in a format that's easier for them to access than previously. It was digital before, but it's a little easier to access now. But it also gives us the ability to reach out to them in a very focused way and say, okay, well, if we know that something is delayed for one group, and maybe not for another, we can proactively reach out to people. And so that has been something that we do quite a bit. And we just spend a lot of time fielding phone calls, looking for timing, talking with the auditors and talking with our folks at KPMG on the tax side, saying, where do we stand with each one of these entities and the K1s, and what's the timing look like, and being able to be proactive and get that information from KPMG, check it, and get it out to the investors as quickly as we can. Technology has allowed us to do that a little more efficiently. And so it really, at the end, starts to become talking to the investors and a lot of interaction that way, because the closer you get to March, the more phone calls you get. Definitely.
Sean, go ahead.
No, Dorada, go first.
Yeah, I was just going to say, obviously leading up to that crunch time, hopefully everyone has a good sense of what's outstanding, because that's the really key. You don't have much time and you need to finalize the work, right? Once you know what that is, hopefully avoid data dumps for auditors. I mean, try to provide to them, and I'm sure that, Bob, you can probably appreciate from tax perspective as well, to provide the information to the auditors as clear as order as possible. Because again, it will cut unnecessary questions, and especially during the crunch time, it's a huge deal. And tax preparers, and I'm sure, Bob, you have first-hand knowledge of this. Tax preparers are reliant on both the administrator and the auditor's work. So any delays can be very challenging, especially during the crunch time. So to combat these delays, we at least saw that sending finalized even pieces of the information across the teams, and not waiting until everything is finalized really can make a difference. And keep copies of everything that you have. Just literally create a folder, send to tax preparers, send to the auditors, because things will get lost for sure. And if that's the case, you can just go back and you don't have to recreate anything. One last point I wanted to make, that one of the things that everyone works during the crunch time is the audited financials, right? And no matter how much you prepare, there's always these things just happen to be released the last minute. It's just the reality. So try to get to a good place during the work, during the early in the process. Try to get those financials in a good shape. So when the year comes, when the crunch time comes, really is all you're putting is just the numbers. So reach out to your auditors, get some examples of new disclosures if there are any. But really, there's quite a bit of things that you can do, again, so your crunch time is not as painful as possible. There's audit report, it's a lengthy process, even for the auditors. They have to go through multiple level of reviews. And usually these are, that's kind of the challenge for them as well. And that's why typically those reports are, being issued the last minute. So get on try to get those reports, in a good shape. One of the things that we actually will be doing Juniper Square Fund Admin is we're going to have a dedicated team of accountants with the public accounting background, and they will handle all the reports for the clients. And again, it will will certainly improve the efficiency and just the quality, overall quality across the board. So something to think about.
Yeah, well, a lot of good points here. As I look back, I think during crunch time, Jay, to your question, it can be a nightmare or it can be manageable. And I think the way to make it manageable, it comes down to a word called organization. If you're organized well in advance, it's manageable process. If you're disorganized going into it, it's a nightmare. For all the reasons that Dorota just spoke about. So for me, I remember back in the days, and this is going to date myself, even though I don't have gray hair. I've been doing this 30 years, but I started my accounting days on ledger cards and manual checks, and everything was done manual. And as we evolved through the process, exactly like Noel was saying, what do you do when you have thousands of K1s you've got to send out? Who's mailing those out? Who's licking the stamps? And yes, I did do my fair share of stamp licking back in the day. And it's just the way it was. So what's really happened today is when we get to crunch time, the more you're organized helps a lot. So I think a lot of us, we hear about fintech, we hear about the digital world. I think for me, having all of my digital records, whether it's in Dropbox or Box or whatever you're using for your file storage, having all of that organized efficiently, having it labeled consistently, having, every investor's got a folder. It's got their capital calls notices. It's got their distribution notices. It's got their subscription agreements. It's got their investor questionnaire. It's got their executed PPM. It's got their K1s that they've been issued in years past. It's got their W-9 that's in there that they executed. It has any of their assignments if they've, as Bob mentioned, that they've changed names throughout the year. I mean, every one of my investor folders is perfect. It's perfect because from the beginning, we take the time daily to do the little things right so that when it comes to crunch time, everything's where it should be, and nobody's scrambling around looking for something. If I want to send one of my principals, they can go to the same folders. I know exactly where everything is for them to go because we've put it there consistently all along. It's the same set of folders my fund administrator uses. So I think the organization is really the key, is with all those electronic records to get them set up, and it falls into the same pattern that Dorota was talking about for the audit. Do you have all of your deposits? Do you have all of your payments and the invoice copies and all of the basic level accounting, documents and support records? Are they all labeled properly, filed properly electronically, so it makes it easy for auditors to do their job? I think, again, the short answer to your short question, Jay, is it all starts in the beginning with good organization of your electronic records so that you're using good source materials for the rest of the 6-month process to hit all your deliverables to your investors, ultimately.
That makes a lot of sense. I will give a quick reminder to folks as we're about halfway through this, a little bit more. So if you haven't sent a question in yet, please do if you have one. You can tell even on this call, there's a whole bunch of different experiences that people have with this, and we'd love to hear about yours or answer any questions you have about yours. The email address to send a question to is questions@junipersquare.com. That's all you have to do. So, as we mentioned at the beginning, we all hope there will not be issues. Once in a blue moon, perhaps every year, or most years, there will be at least one. And so I'd love to hear, this group collectively, I don't know how many year-end processes that this group collectively has been through, but love to hear about what's one issue you had to deal with at some point, what happened, how'd you handle it, and then what'd you learn from it?
I know for me, the one time I had an issue is that, there wasn't clear communication up front, and some of the time, right on the financial audit side, there's consolidation of entities. There are legal separate entities that require separate filing, and got to the end of the day one day and did not have financials that were separated into their legal entities that I would need for a tax, and did not. Causes an issue. Now you need to go back through the chain and get financials that were separate so that you can tax financials are broken apart. So that is definitely a other terms. Something that you need up front that you need to do is how exactly what you need for each, what form you need it in, and exactly what you need is on tax. So important. What form you need it in and exactly what you need is so important.
I think we may be having a little bit of audio difficulty, but I'd love to hear from other folks of what's your story of something that happened once that, hopefully it never happens again.
I've actually been very lucky here at Cunningham. I haven't seen any significant issues that created a real problem. I did have one before at a previous firm that was land development. We were a large institutional land developer. And in 2007, 2008, 2009, you had to go back and reforecast everything. Now all of a sudden we're performing cliff tests on assets during the audit to determine whether or not they were impaired. And if they were impaired, how does that impact the overall book value of the fund, which then how does that impact your loan covenants? And when it's land, nobody wanted land in 2008. And we had a lot of it. And so, it's one of those things that I was dealing with the lenders in that particular in that circumstance. But when it comes up, looking at it from a larger perspective, what's going on in the market and this is something we hadn't done in the past. We didn't have the need to do in the past. And it became a real issue, and we had to start paying attention to the forecasts, the valuations of the different assets, the cash flows, and the projections, because that was going to have a real impact on the audit, and it was going to have a real impact on loan covenants. So that was something that I don't ever want to go through again.
I can certainly share one of my audit experiences. So I was a very happy auditor finalizing one of my biggest hedge fund audits, doing a final review of the audited financials. So we printed about 500 copies, was doing my really final review, nothing major, no detail work, just making sure that all the pages are there. And halfway through, kind of noticed that on the auditor's page, the auditor's signature was missing. So obviously, this is not a good thing. You don't have a signature. Obviously, the auditor reports means nothing. So for about 5 minutes, I thought that the world is about to end. Somehow, I regained my reasoning skills, and ultimately was actually relieved that we caught it before we delivered the financials to the client. We had to reprint everything. But what really this story taught me is, again, no matter how much you plan, no matter how much you do all the things that we discuss, things will happen. You just need to, try to stay calm and put all that energy and, find a solution and try not to panic. So that's kind of one of my fond memories of my audit time.
Yeah, I would say, I think there's lots of examples I can give. One I'm thinking of right now is, as a CFO, one of the things I'm very conscious of is, I'm trying to watch the fund load. And the fund load, for those of you on the call, if you don't know what that is, these are all the extraneous expenses, investors' money that's not invested in investments. If it's invested in an investment, they can get a return of and on those dollars. Fund load would be your fund's organizational costs, legal costs, your management fees to your investment manager, insurance, audit, tax, all those kind of things are what makes up the fund load. And you can't get a return of and on those. Those are sunk costs called a fund load that obviously we try to watch and manage very carefully. The lower we can keep those costs down, the more dollars we have of our investors to invest and make them money. Well, if all you're focused on is trying to just get the least expensive service providers, in the end, it may end up costing you way more money to fix a problem that you didn't know you had. And so what I mean by that is, I think one of the critical things that we did, and we never did it perfectly, but we did, is we spent a lot of time vetting and researching the right providers we wanted to work with. I mean, I must have spent 6 months vetting Juniper Square. And what I did is I didn't just go to their their online web tours and all of the demos. I actually found clients of theirs that had been through 20 years of war stories with other firms and had now come over to Juniper, and I spoke with them directly, other fund administrators and principals at other firms. And that was a critical level of comfort that I was given, is if these other partners that we would aspire to become as investment managers, much bigger firms, if they were now comfortable with Juniper Square, why? And that really helped us in the vetting process. Same thing applied for selecting your fund counsel, selecting your audit and tax firms. I mean, look, I don't like spending 20 grand, 30 grand, 40 grand on an audit, but I really believe you get what you pay for in this business. And I would hope Noel could kind of chime in on this, because he's got way more investments he's managing than we are. But at the end of the day, I think it's whatever that saying is, penny pound foolish, or whatever that saying is. It's like, I would rather spend more money on the right Juniper, KPMG, Anderson, you pick whatever firm and whatever administrator you want to go with, but I would rather spend money on competent experts that are the best in their niche than rely on a less expensive source that I ended up having to replace midstream in the year and basically start all over again with a new administrator. That's like a nightmare scenario to avoid. So I think it really speaks to spending the time up front to find, and they may be the more expensive resource, but I think you really do get what you pay for nowadays with these with the firms and the technologies out there. Noel, do you have any feedback on that?
Yeah, I would agree. We've switched a lot over the last couple of years, just upgrading certain services. So KPMG has been around for quite some time, and we used their expertise to help us vet fund administrators when we entered the fund business in 2014-15. And that was incredibly helpful to get that level of expertise. And we spent quite a bit of time vetting, what would be the right firm to help us enter this fund business for the fund administrator. And we used a law firm for our first two funds, but that there were some personnel changes, and we ended up having to go and get a new fund counsel for our most recent fund, which we launched in 2019. And spent quite a bit of time working with people to get a firm that we were comfortable with, that we knew would do a good job, and we've been very happy. And also when it comes to Juniper Square, I again reached out to KPMG and spent quite a bit of time reviewing every potential option that was out there. And like you, Sean, I went out and I spoke to people that actually were using the software and had been using it for some time, and did that with also competitors. And so wanted to see, I didn't just want necessarily demos. I wanted to see what other people were actually doing in their day-to-day lives. And because once you're there, once you've got those choices made, those are choices you do not want to change on a whim. So making sure that you're vetting those providers, because they will be partners in your business.
One thing I think you guys, Sean and Noel, brought up excellent points. I also would like to kind of add that fund administrators and also auditors can really provide good referrals on each other because they work closely. Fund administrators can actually fairly easy get a sense of the audit's team expertise merely by the questions they are getting from the auditors, and vice versa. Auditors, same thing. Obviously, they have a exposure and to see how fund admin operates, access to their documentation. They can easily also see their, US GAAP expertise. So, good source of referrals also can be fund admins and auditors. I certainly used one of the fund admin teams where I was the VP at my previous job, because we were selecting new auditors. So they provided us with some firms because they literally said, well, this is a good audit team because we had some not only great working relationships, but they are experts in the field. So something to think about.
Mm-hmm. Yeah, it's funny. Noel mentioned, and this is true for us, we had to switch a fund counsel 2 or 3 times. And you wouldn't think, fund counsel, that's a big, important, critical point of contact to have, because they're the underlying, you're relying on them for your legal documents, your subscription agreements, your private placement memorandums, et cetera, et cetera. But we had to switch. Our first fund was done by one firm. One of our sidecars was done by another firm. And then we switched over to another firm, and they helped us with our QOZ, with another sidecar, and now with our second co-GP fund that we're launching March 1st. And I got to tell you, the process was a lot smoother, wicked smart, and cost-wise, it was less than half the cost of the first go-round with the original fund counsel. So I think we are getting better. We are learning from our mistakes. But that was just another example of, even if you do everything right, sometimes you got to switch providers, and it's really painful. But I think it's worth it if you continue to make better choices as you go forward and learn from them.
I think that's a great lead into the last question I'll ask here, which is just closing with some parting wisdom. I feel really lucky to be surrounded by this group with this much expertise. And, folks remember one thing from this conversation. What should it be?
I think I would go back to at least what has made the process so efficient at Cunningham. So, clearly it's how do you eat an elephant, one bite at a time. If you're, we're doing audits and financials and K1s on dozens of assets, and you're looking at properties around the country. They're all structured differently. Some of these projects have been around since the early 90s. Some we just acquired in the last 6 weeks. So it's the structures of deals in those different timeframes are going to be different. The equity partners might be different. And so getting everyone on board up front, knowing exactly what it is you need to do, and working on those milestones and making sure that those milestones are being met, and constantly communicating with one another. It's the organization and the communication that allows this entire process to not be so painful. It is a large process, to be sure, but by working through it, just being very transparent with everyone that you're working with, and very responsive, is the way that we get through this, and it's worked out really well for us.
Mm-hmm. Yeah, I'll piggyback on that. I think, communication regularly with our investors is critical. And what we're trying to do is to help manage expectations. So we try to do that with quarterly newsletters that we send out to all of our investors for each specific fund, with updates on the investments and any little nuggets we can provide on a quarterly basis, just so investors feel like they just don't have their money with a money manager out there that's never calling them except when there's a problem. Because nobody likes to never be heard from, right? But more importantly, we're trying to keep them up to date on little milestones that are happening within the investments, and always making sure that they know that our door is open. I love getting calls from investors to update them on what's going on, because I know what's going on, and they're welcome to call me at any time. But to the degree we can use technology to help us, I can't spend my whole day on the phone with investors all day long. That's impossible. But I think we're using technology. So another big tip, I think, would be to leverage the technology. Whether it's whatever investor portal system you go to. I used to think an investor portal was something where they just dump documents in there. But I tell you, it's gotten so much more efficient. It's way more than that. Electronic subscriptions have been a game changer. When you're using an electronic subscription program, like, for example, Juniper has, where you're able to have investors actually complete their documents electronically, and then the final PDFs get sent, one to you as the investment manager, one to the investor. It gets immediately uploaded into their portal, and it sits there in their document storage. I can't tell you how great that is versus the day when I used to have to print out subscription agreements and PPMs and signature pages, have my principal sign them, go back to the scanner, scan them in one by one, then go to my inbox, and then I'd have to insert all of those signature pages in the PDFs. Talk about a nightmare and a waste of time. I think leveraging technology today to your best advantage is the way to go, whatever that is. Especially now with K1s uploads. Nowadays, somebody like Bob can send me a file with all of my fund level K1s. And maybe there's only one federal K1 for all the investors in that fund. But depending on the fund's investments in each state, some states require you to have a different K1 for every state. And so you might have one investor that gets 2, 5, 8, 10 different K1s. Well, what's beautiful, for example, is that file can come over from Bob with all the K1s, say there's 500 of them. And Juniper, because they're all going to be pre-labeled, is able to reach into that file and able to post them to every investor's portal account and do the matching itself. And all I need to do is just scan through it and check it, hit one button, accept, and it posts them all instantaneously to every investor's account. That's like a miracle. I can't tell you. Like, that type of thing is a miracle, where I used to spend weeks and weeks and weeks making sure every investor gets the right K1s for every investment. And now it's done seamlessly with a good tax preparer, a good auditor, a good fund admin, and a good investor portal system. So long answer, Jay, but that's the fundamentals.
Excellent. I want to, just in the interest of time, I want to see if there are any questions live from the participants who are here. So if you do have a question, and want to unmute yourself and ask the group, why don't you do that now, and we'll see if we can get you an answer. I'll just give another second in case the folks have questions. All right, excellent. I think we've solved everyone's challenges with the year-end process. Well, great. So let's wrap up. Bob Dorota, if you have some parting wisdom as well for folks, and then we'll call it a day.
Bob, do you want to go for it? Yeah, go for it.
Bob, I believe you're on mute.
I think the wisdom on my end would be just, over communicate at the end of the day. Communicate with, the tax audit, communicate with the client, communicate with the administrator, and make sure everybody knows the plan going forward. And the regular check-ins are key as well, to make sure everything's on schedule, so that if you have an issue, you can kind of raise it right away and get it solved quickly instead of it dragging on.
Great. I think I have two things. So one that we've already talked about, which is documentation. I mean, auditors' work greatly depends on timing and the quality of the information they receive. So the more beautiful the work papers and the documentation is that we provide to them, the better we all going to be in the end. So try to make your work papers documentation concise, clear, that includes all the supporting documentation, and apply it to your regular accounting flow. So not just the year end. So when the year comes, everything is ready to go. And the last thing, and they may sound a little bit funny, but if you have auditors coming to work on your site to do the, whether it's an interim testing or field work, try to put them in locations that are user friendly. So do not put them in smelly kitchens, falling apart trailers located to a garbage dams. These are some of my audit memories, because I can tell you that these type of audits most likely will not go well. So make them comfy, because everyone will be, under stress no matter what. So the more you can do better at that front, everyone will be more happy.
What parting words of wisdom. I love that. I think the takeaway for me is, look, it's all a bunch of humans trying to do their best. And, the people across the table from you, people so to the side of the table from you, we're all trying to make this work together. Once again, I want to just thank this group, especially Noel and Sean. I know this is your year-end process that you have taken some time out from to come and speak with us today and just share what you've learned through. I'm not going to try to date you guys or guess by guessing how many year-end processes you've been through, but quite a lot combined on this call. And Bob and Dorota, likewise, thank you for sharing your expertise as well. The questions at email address will stay live for the next few hours. So if you had any questions afterwards, feel free to send them across and we'll try to get you an answer. But thanks to all of you who joined us this morning, and look out for that final email with a quick survey. Thanks again and have a great day.